TFNN. Live at TFNN, the Money Masters. And now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. This is Steve Rhodes, Tom O'Brien. We do appreciate you being with us. Hope you had a great weekend, safe weekend. Market-wise over the weekend, Europe, folks, Europe is in tough shape, man.
Absolutely. Especially when you took a look at the DAX.
Yes.
And I was talking with David just last night for a bit. We were just talking about some things, and I was looking at the DAX during the day, and that thing had gotten below its lows.
Right.
From August.
No, I know.
Which was saying, oh, man.
It's intense. Well, I tell you what I like that's happening right now. When you look at this DAX, I mean, it's almost, that's 3 drives to the bottom.
It is. Absolutely. Absolutely.
And we talk a lot of folks about how, markets never go up forever or down forever. I always like it, and it's always deviant, man. Do you know what I mean? Because then the whole world thinks that, okay, these lows, they're going to bust out in the longer run. Yeah.
Absolutely.
My take is they are.
Yeah.
On the shorter run, what's happening out here today, man, is not enough to bust these things, even come close to busting these things out.
Yeah. No, and I thought that there was as I was going through some charts and things over the weekend.
Yes.
Putting together my newsletter. First, when I took a look at the Qs and saw the rejection of that swing point.
Right.
Okay. It doesn't matter whether it was a holiday Friday or not.
No, it doesn't.
Right.
It doesn't.
Okay.
Right.
But we had a rejection of the swing point. I said, okay, that's interesting. And then I went through each sector of the S&P just to see, where are we at? What's going on here?
Right.
And it looked like we were in a consolidation. It looked like we had, in 7 of the 9 indexes, subsectors there.
Yes.
We were absolutely in a consolidation.
And that's heavy.
And yeah.
That's a huge.
And so that was telling me, okay, we're not going to bust these lows just yet.
Because it's a monster one, folks.
And then there were 2 sectors out there where you could definitely see there was sector rotation.
Yes.
Okay, they were defensive, but they had gotten back all the way up to the July 27th highs that we had out there.
Yeah.
Which was, I hadn't paid attention to it until this weekend.
Right.
As I went through each sector, and I was kind of like, wow, that's interesting.
And I know you were up. I was up. Bottom line, at 0400 this morning, folks, okay, it was wild. I mean, bottom line is that, once everyone thinks everything is safe, specifically what I'm talking about is, and the Swiss franc, all you hear is that, they go into the Swiss franc because it's safe. Well, bottom line is that they took a haircut right across, no matter what currency you had, of 7%. Some of them took haircuts of 10%.
7%,
just like that.
That's right, 7-8%, which, folks, you do not see that very often.
Right.
I mean, you do not see that. I mean, it was like instant.
The amazing part, folks, is that what you don't really have out here in the news this morning is that they're always worrying about, it's the U.S. dollar, it's going to devalue. The franc devalued itself.
Yeah, actually.
That's what it did.
That's right. They said, we don't want to be strong. They
devalued.
That's right.
And so it's intense to the point that you can see when they devalued, the dollar actually went up.
It did.
So, we'll see where this shakes out, but I'm a dollar bull.
And the dollar's strong.
The dollar's strong,
I mean,
man. It's bizarre, but the bottom line is that, the lows were in 2008.
Yes.
It doesn't want to go down. It had if you were around this morning, folks, the spikes were incredible, but they were about for 1 second.
Yeah.
Gold, folks, went from 1923 down to 1860.
Absolutely.
Boom, just like that.
Yeah, absolutely. Yeah, and I was explaining that to on the last show that I did.
Yes, to Kevin.
Kevin. And so
it'll be
interesting to see what the volume ends up coming out. We may be okay today.
Right.
The volume is high enough out there, so maybe we'll be okay. But absolutely, when you take a look at what went on in the currency marketplace yesterday, and really, and I thought there were a couple points that you made on CNBC. The one that I really liked was the fact where you said, we go to work here.
Right.
Absolutely.
Right.
And I know that, and that's really important. I know all of our listeners. I mean, we're all hardworking, good ethics or what have you. But I like that comment. And then and the dollar's it.
Right.
When you take a look at the Swiss are saying, hey, stay away.
Exactly.
Don't put your money here. We don't want your. We don't. and Japan can't afford a stronger dollar. Where are folks going to go to?
No, exactly. And what I've learned over the years is this: is that unfortunately in Europe, and this is what happens. If someone's giving you a check all the time, the bottom line is that why go to work? You know what I mean? Particularly what happens in Europe, folks. Now this isn't everyone in Europe, but the way the structure is that there's a lot of land that's been in families for a long time.
Yes.
So they can have a place, a little vacation place.
Yes.
It's like if they can get the bread, and it's like, oh, why do I want to do that, man? I want to sit in the Amalfi Coast and have a good time.
Yeah, absolutely.
Versus, so now you're in debt, and now you don't want to work to get out of debt. That's what I was saying, basically, is that we're in debt, but the difference is that you're working to get out of debt.
Yes.
And, if you work at anything on a continual basis, no matter how big the hole is, you get out of the hole.
It's just the universe testing you. How badly do you want it?
Yeah,
how badly do you want to climb?
Totally.
To me, it's that you should just let the an event. And look, we're all gonna deal with stress in our life.
Right.
I don't care whether if your finances are in great shape, then something else is going to happen. It's your health, or maybe it's somebody in your family. I mean, you're always going to be, and there's always going to be some stressful event. But you can't let that stress, knock you down. It's just a test.
Totally.
It's just the universe just testing you.
Totally. The U.S. Open was this weekend, right?
Yeah.
And what they had, folks, is that that's the best tennis in the world. Well, if you want to see competition, that's it.
Yeah. And fast courts.
Huge.
Yeah.
And they, in between rounds on Saturday, I believe, or Sunday, I forget what day it was, they played the U.S. Open when Jimmy Connors, the last time he won it.
Oh, did they really?
And he was 39.
Now, who was he? Do you remember? Was he playing McEnroe, or who was he playing back then?
He played McEnroe.
Yeah.
He wasn't supposed to be McEnroe. He was 39 years old.
Yeah.
He was
playing with that old steel racket or something.
And that year, he had broken his wrist the year before.
Okay.
And that year, he was coming in, and he was 170th.
Yeah.
He wasn't even supposed to get in it.
Okay.
And what reminded me about is that he wanted it. What ended up happening is that if you watch that, you probably can Google it to watch it. It's unbelievable, man, because the guy was just dynamic.
Yeah.
And he wanted it, and no one else. And you know what he said? They had him, and he was, going through the tapes. And what he said specifically, he was building the momentum, right?
Yes.
And more and more he wanted. And then he realized on the last rounds, he says, and that was McEnroe, he says, well, he don't want it, I'm taking it.
Yeah, absolutely.
And it was amazing. I mean, he was
I remember.
Yeah.
Back then, it seemed like, not that the tennis players aren't great or anything, but back then, the chemistry that they had between them all, when Connors and first, especially playing in New York,
right.
In that setting,
huge.
Those were showmen.
Yeah.
So they knew how to work the crowd, and you were just so into it.
He worked the crowd.
Two bad guys, right? Two bad guys,
totally.
Right?
Totally.
Two New York bad guys.
Totally. And he did it.
Yeah. And then you'd have Borg. Out there. Now, he'd be more laid back, mild manner. I'm just going to come. I'm going to take my scalpel out. And,
right.
Yeah. Those are absolutely great.
And you can learn a lot about wanting it.
Oh, absolutely. That's why I always love. Sports is the easiest because it's so televised.
Yes.
And you can always sense a shift in energy. When people maybe stop focusing on the present. And you start thinking a little bit too far ahead.
That's right.
Folks,
baby, that's dangerous. That's right.
And especially, and what's so great is because you can correlate it to trading, to what we do every day. Because when you start thinking too far ahead, how much money is it that I'm going to be able to make?
Here now.
You start thinking about that versus you really start focusing on what you can control. And that's where, to avoid stress, folks, one of the things that you should do is focus on what you can control.
Right.
And so in trading, what you can control is the stop.
It's
the risk that you put up there.
Big time.
Yeah. So now, are you a tennis player?
No, but I love it. Well, I played a lot of tennis when I was a kid. Do you know what I mean? But I watch the U.S. Open all the time because they're animals. I mean, they're going for it, man. Do you know what I mean? But the best part of I enjoyed that. Go back to Connors more than anything.
Yeah. Now I saw there was a special that I watched. I think it might have been a. Brian Gumbel, on HBO or what have you, and it was talking about the fact that in the U.S. we haven't, other than the Williams sisters, we haven't produced any top players.
Right.
Well, it's because of the fact that when they go back, they went back and they took a look at the European folks, and from Europe, wherever,
sure.
Russia, and the work ethic, because they wanted it, because they were teaching them.
Right.
It was really all about the same things. So you've got McEnroe and his brother. So you've got the two of them are taking two different approaches, trying to get U.S. players.
That's right.
But what they do is they send their players for 3 months over to Europe.
Yeah, right.
With regard to the tennis regimen.
That 24-year-old Young, okay, he came back. Now, if you saw that match, that was an incredible match, too. And he was when he was 16, he was one of the best players in the country. And then he just lost it for a while.
Yeah.
Now, he came back, and he was in the quarters, okay? And that's what's going on is that McEnroe did get hold of him. You know what I mean?
Okay, yeah.
And it got him going. And what that was all about, the same thing, was about working out. So he had the natural talents.
Yeah.
And this is where it gets really interesting, because even Connors was saying, even with the natural talent, if you don't work at it and don't want it, you won't get it at that level.
No,
so
absolutely.
that, folks, and that's the level we're talking about, even with trading.
Yeah.
You have to want it, and you have to work on it, and stay on top of it.
Oh, totally.
Because you're taking the bread off someone else. That's what you want to remember. The bottom line is that it's a weird business in the context. This is not an even game. You're taking it off someone else. So you want it. You make sure that when that's going green, that as Buzzy Swartz says, ring that register.
That's right. That's right. Absolutely.
No doubt.
Yeah, absolutely.
Right now, the Dow's off 255, Nasdaq's off 53. You get the S&P's off 25, gold's up 28, and the gold thing's going to get interesting because it's like, what is going to basically launch it? I mean, and it's already launched. There's no doubt. It's up 30% in since June.
Yes.
It hasn't closed over that 917. We got to 923 today, folks.
Yeah.
That was intra day, and the way it seems to be set up right now. Well, we'll see where the day closes. But I suspect, actually, what I suspect is that by the end of the day, you're actually going to probably be flat or down a little. So, meaning in the gold market.
Right.
But it's because if that's the case, then we're going to get a rejection of the S&Ps of this low too,
right?
And then it's a field day again. Ba-boom.
Yeah.
You know what I mean? So,
which when you take a look at the whether you're taking a look at the SMINI contract or you're taking the SPX, what we're up against is both the 786 retracement off of the previous swing and then the 618 off of the actual low. So we've got good support in there. So at 9 o'clock, I was watching that like a hawk last night. And every time I'd wake up, I would check to see, okay, what are we doing? Are we holding that level? Are we holding at the 1136 level?
And we're talking big numbers, folks, because on the NASDAQ, in order to blow these lows out, you need almost 4 billion shares.
Yeah.
So you're talking big numbers. And today, we're not going to get big numbers today, because what you do have coming back for Labor Day, the Tuesday after Labor Day is normally pretty slow, meaning volume-wise. What does kick in, starting tomorrow, you get things, look, we're only 234 million.
Right.
That's nothing. It's Tom O'Brien, this is Steve Rhodes. You stay right there, folks. We have the Dow right now off 261, NASDAQ off 54, S&P's off 28. And don't forget, folks, you can come right over and test drive Steve's newsletter right here, right now. It's a 30-day money-back guarantee. We're going to be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Directions Alternative Strategy Funds feature built-in tactical management to help you find clarity for the path ahead. Direction Funds, I'm with X. To learn more about Directions Alternative Strategy Funds, please visit TFNN.com and click on the Direction Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Funds carefully before investing. The prospectus contains this and other information about Direction Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to directionfunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC. For some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. This is Steve Rhodes, Tom O'Brien. We have the Dow down 278, Nasdaq's up 56, S&Ps are up 30, gold is up 27, dollars up 54. You know, it's interesting. So the last time that the Swiss came in and tried to defend the franc last year, and they lost $21 billion. That was a quick one, though. It was June of last year, folks. They came in, they gave it up quickly. But the time before that they came in, they were serious, right? Yeah. Was in 1978, and they were going against the Deutschmark. And the Deutschmark, folks, depending on how long you've been in the marketplace, was right up there with the franc. Okay. They not only defended it for 20 years, it worked. Yeah. So so you better take what they're saying seriously this time, okay? Because if you could defend it against the Deutschmark, folks, you know, that was a big deal. And they just pegged it. Now, the thing that's interesting about the pegging deal is that it just helps the dollar. No matter which way you look at it, it helps the dollar. Because what ends up happening is that what they're saying specifically is that they're not going to allow the euro to get over the 120 franc mark. Yeah. And every time they do, every time it does, they're going to turn around and basically sell into the marketplace. Right, right. You know.
Now, do you think that you know, we know that longer term, okay, in order for the U.S. markets, you know, to continue moving higher, right, okay, at some point in time, right, that we're going to have the correlation between the dollar and the markets has to become in sync. That's correct. Right. Okay. That's correct. So do you think a move like that helps that? Does it help to clear the way? Does that make it any easier?
No, this is that's the most bizarre part. So the bizarre part here, the bizarre part is that a strong dollar is going to make the stock market get lower. That's right. On a short basis. Right. Yeah. But you know what the strong dollar is going to do? Everyone out there, the strong dollar is going to make your community stronger you have more money. And this is where the battle comes. You know, you hear all these folks out there all day long saying corporate, corporate, corporate. Corporate have plenty of money. They want slave labor. That's what they want. And this is where the difference comes in. And the difference is huge. And, you know, that conversation really doesn't get talked about, because that's what is good for the corporations is not good for America.
Absolutely.
You know, one has nothing to do with the other. And the case here is that dollar going up is good for America.
Yeah.
You know, and it's good for jobs, and it's good for all the above. It's terrible for the large industrial corporations because they have made huge amounts of money on, you know, basically a cheap dollar.
Yes, absolutely.
You know? I mean, so the difference is you're all going to be richer without even making a trade. No, if that's what ends up happening with the stronger dollar.
Yeah.
And then I suspect, you know, what will happen is that at one point, then the economy will say, oh my God, hold on, we do have a strong dollar.
Okay.
A strong dollar's all right. Now, I don't think that's going to happen for a year and a half. It's going to take that long to straighten the whole deal out, because what you're going to have to get is you're going to have to get other companies that are taking advantage that all the other currencies are getting weaker, we're getting stronger, so then they're going to be making deals on that aspect, and then you're going to see the earnings come in on that aspect versus just a continual, because we've had this continual now, you know, since 121. 121 was the higher of the dollar, folks, and now you're at 75, 73. You know, and this really comes down to, once again, though, who's going to work and who's not going to work.
Yeah.
That's all it really comes down to. And, you know, who's going to basically pay up versus, you know, the Europeans that continually say they're going to pay up, but the fact of the matter is they're running around the streets, you know. And I'm not judging that. What I am judging is that if you're broke and you're getting that type of money, I just kind of know it too well. It's really hard. You know, the Kennedys in Massachusetts, right?
Yes, yes.
Not Ted Kennedy, right? I love John Kennedy. Ted Kennedy I couldn't stand. And the reason I couldn't stand him, though, is that I always thought that what he always wanted to do was basically keep feeding money in, but he was really feeding money in order to control people.
Absolutely.
And that's a different ball game.
No, absolutely.
Because once you lose your freedom, once you lose your dignity, once you lose that, hey, I'm going to go out there and make money.
Yeah, absolutely.
Then that's problematic.
Yeah.
You know.
Well, I mean, to that effect, you know, there's 25 million U.S. citizens right now that are on food stamps.
Right.
25 million. That's 15% of all Americans.
That's amazing.
Yeah, that's a fact.
Right.
You know, and that's got to be changed.
Right. And
I mean, for everybody, and that's not a good thing.
The thing that's sick about that, in order to get food stamps, right? So check this out. I mean, I know in the state of Florida, right? If you even make $700 a month, you'll only get $10 in food stamps.
Yeah. Jeez.
So check this. So
it's telling you don't go out and work.
Well,
right? So you get
no. Well, what are you going to do with $700 a month? I'm just saying that. Imagine these people have no money then.
Yeah.
I mean, because that is the deal.
Yeah.
$700 a month, you get $20 on that card. So think of, you know, it's a bad scene, man.
Pretty amazing. 25 million Americans on food stamps.
That's intense.
Yeah.
It's probably, though, a lot of the elderly and a lot of the younger people, right?
I don't know the makeup.
You stay right there, folks. This is Steve Rhodes, Tom O'Brien. We'll come right back.
This is Tom O'Brien. If you want to get great trade setups and equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. This is Steve Rhodes, Tom O'Brien, and, bottom line is that over in Europe, they're having some problems here, folks. We get the DAX off 1 6/10%, the CAC Carol's off 1 5, and that's after a pop, and it was positive for a bit.
It was.
So talk to me about what exactly is in your newsletter. How does this work?
The
Mastering Probability.
Yeah,
right?
yeah. Well, what we do is the newsletter is kind of it's a video service as well.
Right.
Okay, so half of the newsletters I'll actually do an actual video. So I'll go through the markets, take a look at what it is that we're looking at trading.
Okay.
And so it's educational, and when we find a trade, then what we do is we go through and we take a look at the real key thing, which is position sizing. So a big focus is, okay, how, now that we know that this is a trade that we want to enter,
right?
Okay, how do we go ahead and calculate our stops? In our case here, we take a look at volatility.
It's cool you can do it on video too.
Yeah. We take a look at volatility stops, but then what we really focus on is really what is the position size. Okay, because the whole key is that in this game here, it's all about money management. You don't have to be right all the time. You don't even have to be right 50% of the time. Okay, we want to be as right as often as we can.
Yeah.
But it's really a money management thing.
It is.
And as soon as you really wrap your head around that from a trading standpoint, then we're either looking at breakouts, or we're looking at Gartley patterns or butterfly patterns, tests of swing points.
Yes.
And so we take a look at all of those things, go through the different indexes, and then, like in today, I use a combination of my charts here that I use on Ensign.
Yes.
I also use David's charts from the Art of the Chart software, so that people could understand the power law vector aspect of it and just try to put it all together for folks.
Yeah.
And then I'm available. Folks are sending me emails all the time or giving me a call or what have you. And it just becomes a process where, I'm here to help empower folks.
And folks, the neat thing here, okay, is that when you're setting up trades and you have this type of volatility, it's a different ball game. And what I mean by that is that there can be, if you keep your stops in, there can be very big money made in a very small amount of time.
Yeah.
I mean, because we know that the volatility, is not only here. I suspect we're going to be here for a year and a half again. See, when the volatility comes back, folks, it doesn't go away. It just doesn't disappear. And we have the ranges are so large right now, and it's always going to be, of course, about currency.
Yeah,
the currency is what's going to not only keep the volatility here, it's going to make it a lot more volatile because no one's going to believe the dollar wants to go higher.
Sure.
And when they start having to close dollar trades, it'll be a total animal. Now it's wild, folks. What people aren't thinking about the bonds. Bonds are at 140, 123. Well, you need dollars to buy bonds.
Absolutely. That's right.
So the biggest buyer of bonds, by the way, is still China, is still Japan. Well, you know what? They're going to take the yuan, they're going to take their yen, and they're going to change it into dollars. That keeps support under it in a huge way.
Yes.
So it's really wild, man, just this whole thing, how it shakes out.
Yeah. What I love about technology, what I'm able to incorporate into the newsletter is help people to understand why it is that we're doing what we're doing.
Yeah, no, absolutely.
Throwing that out there.
Absolutely. Because that makes it much stronger trader, and they'll get in and get out when they're supposed to.
Yeah.
Because they understand it.
Yeah.
So it's,
and I'll bring in, obviously, over the weekend, in a holiday weekend, so I was taking a look at the futures contract.
Yes.
Our market's not trading, so we can take a look at the European indexes, take a look at the futures, and say, okay, here's where we're at. Here's where the line is drawn in the sand.
Right. And boy, they were. I'll tell you, yesterday, I believe that's about the most contracts I saw in the E-mini on a holiday in a long time.
Yeah.
I mean, it was you can trade them. I mean, they were liquid,
right.
they were
That's
flying,
right.
man.
Absolutely. Yeah.
Amazing. Let's go to British Columbia. Let's see if Rick's has paid his taxes up there yet. Hey, what's going on, brother?
How you doing? Yeah, I'm looking to buy JDSU so I can give them an advance for my taxes for next year.
That's a beautiful thing, man.
Hey, I like looking at IBM right now, and I can see it pulling back to 133, but I'm just curious if we're just not on a three-gap play on a daily here. And if you look at IBM, I mean, we dropped Friday on lighter volume, today again.
Yeah. Hey, you stay right there. We're going to be right back with you. This is Steve Rhodes, Tom O'Brien. We got our man Rick from British Columbia. Dow right now is down 297. Nasdaq's off 63. S&Ps are off 30. We're going to be right back.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. But you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow off 294 right now. Nasdaq's off 61. S&Ps are off 32. We're talking with Rick from British Columbia, and we're talking about Big Blue. So what are you looking at when you're looking at this, Rick?
Well, I'm looking for possibly a three-gap play, like if we go down again tomorrow.
Yes.
And I've seen it too many times where Friday's break from Thursday, if you put it like on I looked at a lot of stocks, like on an hourly or whatever.
Sure.
That gap should get filled, but I do see Big Blue pulling back to 133, and if you put it on like a 3-year weekly, you can see, 135, and on a yearly, quarterly, and everything, we've broken it on lighter volume, but I'm just...
Yeah, no. What Rick's talking about is this. So this is how a three-gap play works, folks. We come off the highs at 173. We got two gaps right now. Now, where the gaps start from is where the equities want to go. And in this case, we still have high volume lows. Now, what happens, and this is what's really cool, folks, is that with a three-gap play, most of the time what happens is, in this case, it's coming down at lighter volume, so it comes down. Does the third gap. People think it's going to blow apart then. No, it doesn't blow apart. What it does? Goes all the way back topside again. So then it goes back topside again to that 173. Then you come down and watch out. Yeah, no, I can see it. In fact, when you, at the break, Rick, Steve and I, we pulled up the Qs, and the Qs are doing the exact same thing.
Yeah, I was looking at them too,
Yeah, and that'd be, folks, it'd be a trader's paradise. It is a trader's paradise, but this here is particularly a trader's paradise because you spread... In the NDX is, you're talking about 50 to 56 in the NDX, or the NASDAQ 100. But they're big numbers. There's no doubt about it, man.
Yeah, well, I'd like to thank you again, Tom, for the last 10 years. I wouldn't have been doing this if it wasn't for you. I'd be working in some gold mine up here, probably.
Well, we appreciate you being out there, man.
You take care.
Thanks so much. We had a question in the den. Actually, it was a statement, and it was a statement that let's get the record straight that the dollar index is not the same as the dollar. I would argue about that. And the argument goes like this. Factually, folks, factually he's absolutely correct, that the dollar index is not the dollar.
Sure.
The way fiat currencies trade, however, is that you're trading against your trading partners, okay? So It's what something is worth. And inside the dollar index, the way it works is this, folks. The pound is the biggest part of it, okay? No, the euro is the biggest part of it. That weighting is 57%. The yen is 13. The British pound's 11. The Canadian dollar's 9, and the krone is 4, and the Swiss franc is 3.
Yeah.
That correlation, you can separate that correlation if you want. The bottom line is that if you separate the correlation, the dollar against that pair, it's going up. If you separate that, and the index is going up. So it is a good measurement of where the dollar is going to go. You can do it either way. And it is absolutely telling you whether the dollar is getting stronger or getting weaker.
Yeah.
So just match them up. That's all you have to do. In fact, if you're watching Tiger TV, I'll just match up the euro versus the dollar this morning. In fact, what was amazing is that this morning was on CNBC. I was saying the dollar's getting stronger, and then the guy that was doing the dollar, and he's from Boston too. It's hilarious. He's a trader out of Chicago now because I know him because we talk, and he's saying the euro's stronger. He said, "Well, hold it, man. When I just got here, I was just trading this thing. The euro is weaker."
Yeah.
But what ended up happening is at 0400, it got stronger for one tick, just like the dollar. But the bottom line is that the euro, okay, is basically going lower. That's the bottom line. And, you know, big time, too, not in a small amount. We're at 140 right now. That's wants to make its way down to 138. You blow by 138, folks, and bye-bye. See you later. See you, don't want to be you.
Yeah, now the pound also is, right now, it's moving to, I would say, it's setting up a Gartley buy pattern at the 159 area. And so 159.3 to 159.5. So it's got an ABC, 786, and it'll also be getting all the way down there and testing the swing point low from July 12th. So, you know, you expect to see that happening here, you know, overnight, which would, you know, that means it's going to continue to put some pressure on the U.S. markets, which what we're seeing right now.
That's right.
It's really what's unfolding in front of us with the Dow being down 300. So it would continue to put pressure on us. Then if this Gartley pattern works, then we see the dollar weaken for a bit. Markets start to do its bounce, you know, in this trading range. So that's the way it seems to be setting up.
Yeah, no, absolutely, man. You know, you gotta love it. I'll tell you, folks. Okay, the volatility's there. The Dow. Now, what the Dow has just done is this. The Dow absolutely has just, you know, it's down 300. It's not that the 300 is important. What the Dow has done, though, is that we're breaking that whole, not that it was an uptrend, but the bottom line is that that is breaking with conviction. And that's saying that we're 10,638. It's saying that, hey, this 10,604 can be gained. You know, let me just look at the NASDAQ for a second. Today, folks, you want to be all over this, okay? You know, because if you, let's see, Tuesdays, changing the market, Wednesdays are always pretty cool. So that the NASDAQ is not saying much. The SP, let me just pull up the SPY for a second. The SPY, yeah, the SPY's setting up. This is setting up for, this is going to get really wild, man. This is, you know, it's so sick, folks. This is setting up for a buy. It's gonna, you know what they'll do? Listen, you know what? You know, more than likely what you'll see is this. You know, like when you go to the highs, right? It's always the Dow, the top line number.
Absolutely.
And it's like, that's the thing. So the Dow will get smoked, okay? That may be down 500. And the S&P won't make it down to the bottom.
Right.
And that'll probably be the buy. So when I say that it's going to be a field, well, it is a field day, but I think there's going to be a flip here somewhere. Now, it certainly doesn't have to be this afternoon, but by tomorrow morning, I think we're going to see some action out here.
Yeah.
You know.
Well, and that's really the, you know, because you were talking about the currency, because that's when, you know, because things are valued in currencies, in dollars or what have you. Okay.
Right.
And so, you know, I mean, I prefer to see the work on the currency being done overnight.
Yes.
You know, it makes it a little bit easier to set up the trade the next day.
No, particularly when you're understanding the currency versus the trade.
Yeah,
right.
Yeah.
Exactly.
So, you know, the mini contract's still holding that 1136 area.
Yeah.
So, you know, it'd be nice if we can, you know, that won't be talked about, but it's certainly something that I'm watching.
Oh, big time. And right now you're at 300 million on the NYSE. On the NASDAQ, you're at 462. And that's not enough. That's not even close to be enough, you know. The three-gap play that Rick was just talking about, that could be the number. And let me tell you something. I've traded these three-gap plays. You get these things right, they're insane, you know, because, of course, what you're doing is that you know, we flip the shots to the longs, and you flip them out again.
Yeah.
You know.
Now,
and they're very quick, by the way.
For sure. Now, Tom and I can't control what the markets are going to do, as much as we'd like to.
That's right.
You know, and so when I take a look at the NYSE, the one thing you got to watch there, folks, and you should take a look at it.
Yeah.
You know, we cannot see it close below 68.27. That's the lows that we're taking a look at from the week of August.
Oh, that's
12th.
right.
So if it tests it, that's fine. But it closed below that. Then,
good night, Irene.
Absolutely.
You stay right there, folks. Steve and I are coming right back.
If you're in the market for a jumbo preferred non-conforming loan anywhere from $417,000 all the way up to $3 million, and you have a FICO of at least 720, then Everbank is your answer. As a direct lender with processing, underwriting, and funding all under one roof, Everbank can offer the most competitive rates, greater efficiency, and shorter closing times. Now is the time to act. Everbank offers fixed terms of 10 and 15 years, as well as adjustable terms of 5, 7, and 10 years, including interest-only options on primary residences. For more information, call Everbank today at 877-471-5970 to talk with a member of their concierge team that will walk you through the variety of loans they offer. That's 877-471-5970, and let them know you heard this offer on TFNN. Everbank, 877-471-5970, 877-471-5970.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks. This is Steve Rhodes, Tom O'Brien. We have the Dow off 268, NASDAQ off 56, S&P's off 28. And folks, don't forget, you stay right there because Steve's going to be coming up next with his Trader's Edge program. Don Kaufman, live from Chicago. You trade options, folks. He's coming up from 12 to 1. Then Ken Shreve will go all the way out to California, and then we're going to come right back to Tampa from 4 to 6, and I'll be growling on Prowling with you.
Around the world, baby.
Around the world. There's nothing like it, man. There's nothing like that technology, right? I mean, you know, it's pretty amazing what you can do. And you know, folks, what you are going to see, it'll take us probably still another month, but we actually got the actual TV up and running now on the Androids.
Yeah.
You know,
okay, cool.
we're test driving them in here now, but what ends up happening, we test drive them quite a bit before we actually put it out there. But I was watching Steve on Friday, and it was awesome, man. Wait till you see this, folks. It's absolutely incredible. You can actually, you take it on and the TV looks so cool because the screen itself is like bigger than the YouTube screen. Well, I got to, but sure. It really works well. Yeah. It really works well. So and you know what I learned, though, which this gets really interesting, is that Apple not doing the Flash deal, right, is a huge deal. And the reason it's such a huge deal, folks, is this, is that the way that we're delivering the stream plus the clarity, right, is that we had to buy a bunch of different software to put onside the servers, but it's all Flash software. It's all Flash software. And what it does is this, so check out what it does. What it does is actually, when you sign on, right, it knows what device you have, right, and it will deliver the software and the flash to the device you have.
Really?
Yeah, that's what it does. So if it's an Android, if it's BlackBerry, if it's a Microsoft, you know, we'll work on the Apple too. But the reality is that they're all a little bit different. But the software is so smart; it knows what it knows what you're requesting. That's what it does. Yeah, which is really cool, man.
It's the one thing. It's the one thing about Apple in the iPhones that that if you're doing a search and go to a website, I just like, come on, Steve.
Right?
Not me. Steve Jobs. Come on, change it up.
For sure. Well, and the bottom line is that they made a huge mistake years ago. You know what I mean? And that was a big mistake, because it's interesting. When I first started this business, I had the IBM 286s. Now, the IBM 286s, that would cost $5,500. And what was that? Our phones are more powerful than those, right?
Look, guys, my first computer that I bought was had two or one floppy disks.
Right.
And I spent $10,000.
Yeah, totally.
Just the computer
I wish I
and a printer.
The computers I bought for Tommy, the first Commodores. He was 5 years old, so it was 25 years ago. Man, I wish I kept those. They would have paid for quite a bit, no doubt.
Yeah. Can you imagine using those floppy disks?
I remember using them all the time.
Goodness.
No, zeros and ones. That was it, right? That was all there was. But the technology is moving. Moving good, though. There's no doubt about it. But the clarity is unbelievable, and particularly what we do, folks, because of the charts and all of this, it makes a huge difference.
No, totally.
Yeah.
I mean, look, what you're delivering for folks out there, is, and we know that folks are visual, so that's the whole thing about this Tiger TV.
Right.
Being able to deliver it on a continuous basis and to help empower folks. Because what we know is that, everyone is affected by what goes on in the marketplace.
Big time.
And as I was saying on my early show, what I hated the most, what I saw last time in the big downdraft, was folks that just stayed in all the way down and didn't get out.
Heavy, man.
Heavy
scene.
And people do. We just want to help to educate folks.
Right. Because there's no reason. Cash is a trade.
Yeah, absolutely.
Cash is a trade. That's your quote. That's your quote too.
Yeah, absolutely.
But that is a trade. That's a good trade.
Totally. Totally.
You stay right there, folks. We really do appreciate you being there. And if you enjoy the program, please tell 3 people, folks. Steve's going to be coming right back with you. We have the Dow down 253, Nasdaq off 55, S&P's off 27, gold's up 23, platinum's down 20, dollar index. Go long America, folks, up 54.
Okay.